fun and
Sounds
fun.
good. For sure.
Hey, Chad, how you doing?
I'm great. How are you, Ron?
I'm doing all right. Guys, if you're here today, this has been announced a lot over the last few days. I am so excited to be able to talk to the man, the myth, the legend,
Oh, wow.
Chad Jampedro. Well, that's what you told me to say, wasn't it? Hang on a second. Yeah, I got that right. I get my $5.
Maybe 2 out of the 3 are true.
Just the man and the myth.
Yeah, maybe those 2 are true. We'll see.
So, guys, if you're in the New Home Niche Blueprint group, or if you're in the affiliate realtor group for Hoodle, please jump in. Down at the bottom of the screen here, you can see it says go to streamyard.com/Facebook. And I tell this every time, Chad, that we do this because the first time people would jump on, in order for them to show up in the comments in the chat, they have to okay StreamYard to be able to interact with their Facebook page. So and then once you guys have done that, you never have to do it again. It's always good. Every time we have Chad on or anybody else, you can just jump right in and give them the what for, okay? Because I know you probably got that. So, Chad, that is a cool light behind you. Is that a light?
It is a light. Yes, it is. I thought it was cool too. It was like a Instagram impulse buy, if that's something these days. But it was just kind of scrolling through and saw it, and they said that they could make any light you want. So it is a light, and apparently this thing's supposed to last like 10 years. So
that is awesome. How big do I have to get at Hoodle to have one of those?
That's a good question. I think you're big enough right now that you can.
Okay. All right. Hang on one second, guys. Hi, how are you doing?
I'm doing good. How are you, Ron?
Doing fantastic. Hang on.
Hi, Chad. Nice to meet you.
Good to meet you. I think I got a note from one of our originators the other day. He reached out. So maybe after we could chat a little bit about our plans there.
Okay, sounds great.
Alrighty then. Guys, welcome. Heike, welcome. And Chad, welcome. I'm so excited to do this. So, if you're in the New Home Niche Blueprint group, and if you're live, would love for you to say hello. Go to streamyard.com/Facebook and say, okay. And then your name will show up in the chat window. If not, then you just get to listen to ourselves talk.
Right.
And Chad is going to inform us of some really good information. I think when it comes to doing new construction deals and really becoming the go-to for home building, one of the most important things, first of all, is you got to know who the builders are in the neighborhood. You got to know your inventory, right? And then right alongside of that, you got to figure out what are my options on funding this thing, or helping my buyers fund it. And Chad, I don't know if we'll even get into a chance, if we can, or you just got to give me some guidance here. But, if there's an opportunity to talk about funding on the builder side as well, and the developer, and I don't know if you guys get into that, but it's definitely something that realtors need to understand. And we have realtors all the time. Every week, there are realtors that are reaching out going, I don't get this or I don't get that about. So I decided, let's go to the source, right?
For sure.
That's it. And so, guys, welcome here today. Please connect on streamyard.com/Facebook. And so you can ask your questions, and would love to, get your input as we move along. And so as we start this, let me just start with a couple of introductions. Heike is a realtor in Dallas-Fort Worth area. Do you want to introduce yourself, Heike, real quick?
Sure. Yeah. My name is Heike Middelman, and I'm here in the Dallas-Fort Worth area in my 6th year of real estate. And I've sold a number of new construction homes, and I decided to really make this my niche. I think there's a lot of potential for buyers. There's a lot of, it's actually a lot easier, at least in this current market, I believe, for buyers to buy new construction than to compete with 75 other offers on that house in McKinney. And people may need to plan a little more time, but I think there's just a lot more opportunities for buyers. Plus, I believe they build equity anyway. So I'm originally from Germany. That's why I have an unusual name, and I'm kind of work Dallas and the northern suburbs.
So is that not a Dallas accent I'm hearing?
Not Far East Texas.
Oh, Far East Texas. Okay.
Far East Texas, yeah.
Yeah. And Chad, why don't you introduce yourself to everybody, and would love to, and then we'll, want to get into a little bit of the background of who Go is, Go Mortgage, and then we'll jump into our topic. And I've got some slides to share with everybody as well. So
Sure.
From Chad. So.
I'm Chad Jampedro. I'm the president of Go Mortgage. Go Mortgage, we're primarily residential retail lender. We have some third-party origination as well. We've been in the mortgage game now. This is 27 years. Formerly known as GSF Mortgage Corporation. About a year and a half ago, we changed our name to Go Mortgage, and for all the obvious reasons, right? It's just, even the cool sign. It'd be tough to pull that sign off if it was GSF Mortgage Corporation.
Yes.
Did you say 27 years?
Yeah, we've been in business 27 years. Now, I've been here, this is 21 years. So I haven't been here the entire time, but my two partners, Phil Siebert and Jim Gazanik, were the original founders. And which is interesting is my career trajectory has been, at that time they were my boss mentors, and now they're my partners, which is a very interesting trek in the mortgage industry to go from, working for those guys to working with them.
Yeah. Hey, by the way, as we're jumping into this, are you guys hearing okay? You're not getting any echo or slap back or anything, are you? Everybody okay?
Yep.
Okay. Good. All right. Sounds good. Well, that's a long time to be in mortgage. You've probably seen some changes over those years, haven't you?
Well, when I first started, this was a full head of black curly hair, by the way.
Right.
So, some of the changes I see are in the mirror each morning. But yeah, we've seen really it all, right? From 9/11 through the meltdown, then into COVID. So those have been certainly battles inside of really for our entire country, but in our industry especially, for sure.
Yeah. What's interesting too is the numbers of new construction now are really starting to climb. They're in that J curve, and generally, in a given year, there's somewhere around 750,000, 800,000 to 1.2 million people that will build or buy new construction. And those numbers are starting to skyrocket now. So there's a lot more buyers that are interested or ready. And, just as you were saying, Heike, it's easier in a lot of cases. And in fact, I was just chatting with somebody this morning that all the builders are busy in their market. It's like, well, have you looked at offsite building? Because there's a lot of new options that are out there. And I don't know how mortgage plays into those and everything, but but there are a lot more people. And I think COVID too has caused more people to go, all right, I want new. I don't want to deal with somebody else's cooties, And so we have that going for us as well. So what we wanted to do today was, Chad, Heike is in the middle of doing a number of deals. She's got a number of transactions going, but she's got one or two clients that she's got particular questions about. And so I thought probably the best way to introduce this is, let Heike go ahead and throw her questions in to you. And then, as we get into it, I'd really like for you to kind of give the big picture as well. Would that work all right with you guys? You think that'll?
Sure.
Sounds good to me.
That's a good way to do it.
Yeah.
And then whenever you're ready, Chad, just tell me and we'll throw up your slide presentation. We can kind of walk through the overview that way. Okay.
Sounds good.
Well, why don't we start with your question then, Heike, and your scenario?
Yeah, I have some buyers. They contacted me a couple of weeks ago, and they want to buy a semi-custom or custom home. They were looking at a particular neighborhood with it's kind of just different builders are building in the neighborhood, but they have a few slots that are dedicated as custom home lots, and so they were really interested in that. And so we're looking at different builders, but also at different ways of financing the new construction. The particular thing is they don't want to move out of their current home until they can move into their new home. They don't want to move twice. They have a little girl, and it's just costly. It's a lot of hassle. And what are the different options? And he's looking for ideally a one close new construction loan.
Sure.
What are the options? I've done several new construction homes, but never the custom route. So I asked Ron some questions, and then he suggested, well, I know someone we can talk to.
For sure. So there are a couple of options in the single closed construction space, but a couple of things. One is there's an element here that we've got to acknowledge, and we could come back to it a little bit. For us as a lender, we offer all of the single closed construction products. And what's different about the single close is that there are products within that product. So you've got a Fannie Mae product, you've got a FHA, a VA, and a USDA, right? And then we can talk about the differences there. But there's an element of builder eligibility to talk through, right? So the builder, has to be vetted by us as a lender, and there are criteria that we have for those particular builders, and I'll explain why. So, when we close on the one loan, that's a loan with a note, right? But it's uncollateralized. We don't have a property.
Right.
So one of the largest risks, in fact, probably the largest, take borrower risk out of it, is making sure that the home gets completed. Because think of it this way. One is that nothing can happen. Everything's pretty much tied up. We can't, push the loan into an MBS security. They can't make payments until the home is complete. And in today's environment, if you've got a builder that's building, right, and let's say, they can't finish, you've got to get another builder to come in. Who knows how long that can take, right? So then one of the features of single closed construction that I think make it more mainstream lending is it's a replenishable resource, meaning it's not a portfolio loan, at a bank that at a certain point in time, they're going to fill up that capacity. Every time a loan is modified from us as a lender, it moves into our servicing portfolio, and we now can lend that money again. So if it takes up too much time or the property is not getting, completed, it creates issues across the board. And then it can also lose eligibility to Fannie, HUD as it relates to FHA, VA, and USDA. So builder eligibility is one element, but then think of it as having that full scope of products available. So you've got a Fannie product. Fannie traditionally offers a 70 LTV single closed construction. We're one of the few lenders in the country that have a 95 LTV single closed construction, so it's only 5% down.
Yeah.
That is, granted through a variance with Fannie Mae, and we work in conjunction with their group. And look, we were able to achieve that because of our experience in that space. But then you've got your FHA product, and it's going to follow traditional FHA guidelines. Now we've got some overlay in there as far as credit scores and DTI. However, it traditionally follows your normal credit underwrite, and that is 96.5 LTV. VA, where I think there's the largest opportunity, follows VA guidelines. The builder themselves would need to be registered with VA and on their website. That's something that we can help them out with. And that's 100 LTV. I mean, it's no money down build in that scenario. And then USDA would have to meet the USDA requirements as it being a rural property. And again, that's 100%. So thinking of the construction lending, this was, to me, what was interesting and I've been on this trek for a number of years of making this type of lending mainstream, is that it has been mainstream. It's all of the products that we're typically used to, but it's now for that new construction. And to your point, one of the features is that for, let's say, the Fannie product, you're going to pay interim interest only amount that you draw along the way. So it's a small amount and it grows over the course of a period of time. On the Govy side, you're not making interest payments. So for that borrower who wants to live in their home, build a new home, they're not taking on additional expense until that home is complete. So I think that's also a feature that allows it to be mainstream, is because that could be tough for anyone. And, growing up, I always thought, look, if you wanted to build a home, I mean, I'm from Western Pennsylvania near Pittsburgh, and, I thought you had to be, you had to be rich to build a home, right? You had to have tons of money to do that. Well, the types of products that have been put into play over the course of the last 30 years, typically lean towards more affordable housing. And for a lot of time, it was kind of locking out the new construction opportunities. But now we see that's kind of expanding, especially in the market right now with all the opportunity that exists there for folks to put less money down, have options like not making any type of payment while their home is being built.
Mm-hmm.
So that was a lot. Did it answer your question of what's available?
To some extent, yes, absolutely. One question. So, on like the 5% down, let's say that would be the scenario. It would be conventional loan 5%, and when the construction is complete and they sell their existing home, do they have to refinance, or can they make more payments, a bigger balloon payment, and it's getting recast, or what's available there?
So when they sell their home, they can take proceeds from that home and then apply it towards the balance of their newly built home. And it is a recast in that scenario. Okay. So they're going to recast the loan. Interest rate stays intact in that scenario. So it's not a refinance. It's just reducing principal and re-amortizing the loan. So that is an option for sure that once they're complete, and there is no need for a refinance. One of the things that we do, and there are other lenders that offer the single close construction. I make sure that that's understood. We do it. We feel just like any other company. We're going to feel that we're the best at it, right? That's. But there are others out there that offer it. Some have different guidelines than we have, or different features. One of the features that we offer is a free float down. So for all of our borrowers, right? So they're gonna lock in their rate prior to closing on that loan. Now it's going to take anywhere from 7 to 9 to 10 months or so, to build their home. Interest rates, they're protected in that scenario, but interest rates can go up, which is, if it does, they're still protected, but they may drop. We do a free float down that allows them to take advantage as close as we can get to market before we modify that loan and put it into the MBS security. So, it benefits everybody involved. One, it's a lower payment for the borrower. And for us as the servicer, it's a more marketable, service loan in the sense of it's going to stay in servicing longer. It's going to be protected from, if you put a high rates into servicing, very shortly someone's going to come around and refinance them and take them away. So it benefits everyone.
Yeah.
Now, I got to ask a question here, Chad. What is a flow down? Taika probably knows. I don't. What is the free flow
down? I do not.
So a float down is allowing you float. Yeah, sorry.
Okay, float down.
Yeah,
right.
FLOAT down, right?
Yeah.
So that is, in relation to your locked interest rate, right?
Okay. All right.
Let's say you're locking your interest rate at 3% or 3.25%, right? Let's say, let's be in today's market, probably be around 3.125%, 3.25%, and market rates are around 3% to 3.25%, depending on where you are. So now let's say the rates when the home is complete are now 2.5%. So rates have gotten better during the build time. We will float the rate down closer to that market rate so that they're getting the benefit of the lower rate, and they're not in a situation where they have to refinance to do that. They get that benefit as just part of the loan that they're already in.
Yeah, that's awesome.
It's pretty
hey, real quick, I got to say hi to our friend Carla Goddard here. Carla's on listening. If you guys haven't met Carla yet, you really ought to. Carla's got an incredible team that she's put together down in the Tampa area, and she's part of Hoodle as well. She's and they just do new construction, and they're doing a lot of it. So, absolutely somebody that we need to have Carla on and interview her one of these days. So, Carla, glad you're here. If you have any questions, please pop them in the chat window as we're talking here, because we'd like to hear from you too. So, well, that's interesting. And how difficult is it to get somebody cleared for that? It sounds like, so you've got more risk and you got to get the builder approved. Is that like a pain in the side, or are builders willing to do that?
Yeah. There's different types of builders, and I've shared with you that presentation. And if we don't get to it, it's fine, Ron. We would just share it with your group. But some builders are open to that type of eligibility requirements. Others may not be. I'll say this: if they have their own mortgage company, they may tend to not want to go through that type of scrutiny, right? But we look at it as a relatively painless process. However, it's the builder. It's going to be their opinion of whether or not they want to go through it. But I would say this, for the most part, they do choose to, they see the benefit in the product set. And it also gives them some benefits as well. For some builders, it's balance sheet relief, meaning if they own the land and that land is on their balance sheet, when we close that loan, now that land is owned by the borrower, even though it's financed by us, they may not be making payments, but now it's off of their balance sheet. Allows them to buy more land, maybe utilize that capital in another way. So there's some benefits there. And if the builders see that, then they'll make that, and go through it. Really what we're looking for there is really their wherewithal to be able to complete those properties regardless of what's going on in the market. I mentioned a little earlier, though, hate to bring it up all these years later, but during the meltdown period of time, many builders really struggled or went out of business. There was just not a lot of liquidity in the market. And a big part of that was, the financing evaporated. So now the builders are holding those properties on their line, and eventually the banks come a-calling if they can't liquidate those homes. And that created a lot of the issues that the builders felt during that period of time. In this scenario, it's off, right? So they're essentially out of harm's way or potential harm's way. And what we need from them in that is their ability to be able to build through all of those types of environments to complete the home. We're not builders. We're in the mortgage business. Heike's she's a real estate agent. She's in the real estate business. That builder and their strength and ability to deliver those homes are extremely important to all of us in that particular transaction.
Absolutely.
It seems like to me that a one-time close would be the way that everybody wants to go.
Well, I would say, I'd say this. I feel that it's an advantage, but let me talk about disadvantages, right? So,
okay. All right.
So here's some of the disadvantages. One is that you do get access to what we consider to be more mainstream products, conforming lending, right? So then it's going to need to conform. So sometimes, let's say it's a spec home and there's a certain type of architecture or, some of the materials that may be utilized. And we're seeing more materials that would be, alternative materials, especially in light of some of the supply constraints that we've been seeing, over the last 18 months or so. Well, and in the conforming world, those loans are not financeable. So, a separate, type of financing. And again, in the presentation, there's some of those details there. One of them is the traditional 2-time close. Typically could be a bit more flexible, and they're typically offered by institutions that maybe are a bit more local in the sense of understanding, hey, here's the type of materials. Think Arizona or New Mexico. Adobe homes are popular there. And, that type of, not to say that all Adobe homes would be exempt from this, but in some cases, you're going to need that type of non-traditional financing. And then in that scenario, it makes sense for a traditional. Large loans. Right? So, these are following conforming loan limits, and yes, they're going up. There's high balance limits that you could get in some counties. But if you're going $3-4 million homes, well, single close construction are not going to touch those types of loan amounts. So big loan amounts is going to miss the single close construction market. The builder eligibility aspect of it, right? Because we have a one loan, there's no out. So in a scenario where, let's say, that builder is necessary, let's say, for that borrower, and they're not made eligible for this type of product, that traditional, because now let's say it's financed with a bank or a credit union, there's an out there. They may say it's okay with the builder. We're not going to vet them, although I know that they do. We're maybe not vetting them as much because once the property is complete or it's on the borrower to pay it off. So there could be another reason to use traditional. So I think there's room certainly in the marketplace for all of the different financing types because it's playing to some element of the market for sure.
Yeah. I have another question. So let's say there's the one close new construction loan, and there are the different draws during the process of construction. Can you talk a little bit about that? What kind of safeguards are in place that builders don't take advantage and draw money that they really shouldn't be eligible for at this point? Also, are you making exceptions? For example, here in the Dallas-Fort Worth area, most houses have a brick exterior. And I mean, brick can take forever right now to be delivered. And so do you make allowances for builders to order earlier than they would normally do in the process?
Sure. So, the draw, process is similar to, let's say, a traditional, where you're going to, we build a plan out ahead of time, and this would be across pretty much all financing types of, what are the costs associated, the timing, et cetera. And we actually still, and it's kind of old school, but we still do it. We have an actual conversation with builder or the builder representative, our borrower,
Mm-hmm.
and then our loan originator. So everybody's on the same page and understanding how draws work and what triggers a draw. So typically it's, there's a schedule of draws, and then an inspector goes out, and then, okay, inspect, work is done. Now the draw is made. Now it is still a conversation. So we have a relationship with that builder, and they're communicating that to our draw admins to say, hey, we've got to go earlier, or what we've got to do in order to deal with some of the supply constraints. We've also been having those conversations on having, provisions made for cost overruns, et cetera, early, because that's what the market is dealing us right now. And some of the timelines in relation to, just materials and supply, although they're getting better. And listen, there was a period of time there that it was extremely difficult. When we had a builder that I spoke with, that there was a number of homes not just financed through us, but with others that, I mean, they needed toilets and garage doors. They couldn't. So folks are ready, home is done, ready to move in, but there was a shortage of toilets and garage doors, and you can't complete the home without it, right? You got to have the garage door and you've got to have the toilet. So we work with those builders. We want to have a relationship there, and it's a conversation. So this is also one of the reasons why this type of product, I feel, is suited for our shape and size of company, because we're not scaling that relationship out of it. We've got to be able to communicate with our borrower base. We've got to be able to communicate with our builder base, and it's not something that's an automated system that can do that. A lot of this has to be real relevant conversations that we're working together in order to get the home completed.
Yeah.
Go ahead, Heike. Go ahead.
No, I said just that makes sense.
Yeah.
And I like the first approach that's really relationship based and not just some
we
number and
exactly right. We've got builder representatives. There's a gentleman, Frank Papaleo, who works with us. He works with all of our builders. He meets them, he talks to them, he understands their business. Our draw admins will make relationships with them as well. Really our entire executive team helps work alongside the builders and understanding their business plans. Sometimes we learn things from the builder. That is, by the way, our litmus test of what's going on in the market. I can look at statistics that I'm seeing. Typically, they're going to be later, right? So what's happening in real time, I'm not usually getting stats until weeks later. Your builders will tell you, we knew what was going on with lumber before it was hitting the front page of the paper, right? We knew what was going on with some of the supply constraints, because their builders are giving you that feedback, really throughout the course of transactions, which is, if you're listening, it allows you to shape your business and work in conjunction with your builder partner so that you can help them through it, right? So if they're dealing with overruns and you've got to start to make allowances at the beginning, you've got to be having those conversations. If you're not, and you could end up being too rigid, now it's not a benefit to the builder to work with you, and it slows down. I mean, right now builders want to keep moving. They're more focused on capacity, the ability to build a number of homes. So, the last thing we want to do is complicate their lives with, those types of conversations, or applying rules to them that shouldn't be applied in current market conditions.
Sure.
Chad, by the way, folks, I see that some different people have joined. If you've got a question for Chad, we've got him here for another little bit. Feel free to jump in and ask any questions you have. I'm sure he or his team would be more than willing to talk to you afterwards as well. Chad, so what about things like offsite building? This is becoming a big thing. Different kinds of modular and offsite construction.
Sure.
You've got log homes. You've got heavy timber. You got concrete homes, ICF. All these new types of construction, even 3D printing that's starting to happen now. Where does all that fit within? I got to get this thing funded. And what are your thoughts about any of that?
Well, some of it can be funded through these types of products, right? So you're going to have different, again, you're following the guidelines of, Fannie Mae. We're going to follow the guidelines of HUD as it relates. So some can, and then, then there are other non-traditional sources of funding for some of those things. We see steel homes now becoming something that's, in my opinion, offsite is going to be the future of the way we build at scale in order to fill the gap. I mean, think about the gap that was just created from 2019 to 2021. I track, new home formations against home starts, and the gap widened to, 5.2 million homes. 5.2 million. We're short that amount, right? Another statistic there would say that at the same pace of the average, new home start, it would take triple the production just to meet that need if it continues at the same 5-year pace. But even if it was not at that, let's say 2021, new home formations have been lower than the last year, right? Let's say it stays at that pace, we'd still have to double production at that. So then these types of alternatives are going to be necessary. For me, I love manufactured and modular housing in the sense of what they're doing in that space is, it's innovative, it's efficient, it's green. The materials levels have really grown in quality and choices over the last 5 years, especially. So, there was a stigma attached to, let's say, manufactured home, right? It's a double wide right. There are some scenarios where you see the end product, you can't tell the difference. Now, modular is even a step in, I think, even a better direction, especially if you're going to go larger homes. There's a bit more, higher level materials. They're building that in, elements that are now being shipped to the site. Very efficient. It also is efficient in a couple of ways. One, typically supply chains are not impacting that business as much. They're usually you've got inventory that they can kind of bring to the forefront. Labor in that scenario doesn't impact it as much. Labor is one of those things that you don't want to hurt the labor base in my mind, right? So the subs and all of those that are serving that community are so important, right? So you need them and you want them as part of it, but at the same time, if there's a shortage in labor, well, then how do we get these units out, right? So I think modular keeps a good balance between both. So both of those are offsite, and I think are going to be the future in the way that we build. And we're starting to see that Fannie Mae more recently, or about a year ago, that they've adjusted some programs to look at financing modular homes on the government side, manufactured homes on the government side. They finance manufactured. So I've always liked that style of business, and I feel it serves a section of our client base. They're not building a luxury home or a custom home, right? But they want to build, and I feel it serves a price point at a really high level, and the quality is continuing to grow there as well. So I see that as the future, and then some of the other, earth homes and things like that are going to be a part of the conversation. Stick-built homes are still going to be, they're going to still get the lion's share. I don't have a projection on when that changes, and I can't see it changing anytime soon. But these other, materials and other styles of building are going to be becoming more and more mainstream, certainly over the next decade as we try to close this gap.
So Carla's got a great question here, man. I tell you what, I got a lot of questions. We might have to do part 2 on this sometime, Chad, because I don't think we're going to get it all covered in an hour. There's a lot to talk about here. Before we go any further, because I've got my questions, but I want to make sure that the realtors get their questions answered first. So, anybody, if you're on here, if you've got a question or you got a comment, now's the opportunity. We've got Chad Jampedro, president of Go Mortgage, on the line with us. So this is the opportunity to ask any of these tough questions that you need to know, get your deals funded. Carla's asking, okay, and I don't know if this whole thing is coming up or not. New construction loans. How are you competing with the in-house lender offering 10K in closing cost assistance?
Yeah, this could be a challenge for us, and it can be a knife fight. There's no question about it, right? Where they may offer 10K in closing cost assistance. They may offer, free appliance upgrade or countertop upgrade, those types of things, because they're closer to the build and they can utilize that. In those scenarios, we'll typically, from an interest rate perspective, we can, outcompete from a closing cost perspective. But still, though, there's a gap there. They have a lever that they can pull that we can't. We can't throw in from the lender side, an upgraded stove and refrigerator set. So, we appeal to really the finance nature of the individual, and we're saving you X amount in interest. There are protections in here like a free float down, some of those other features, and then let them weigh it out, right? Of what's a benefit to them. Also, in a lot of ways, pointing out that for the in-house lender scenario is that cost is coming somewhere. So if they're, look, I think we're all reasonable enough to know there's nothing for free in this life. So hey, we're gonna throw this in as there is a balance to that bonus somewhere in this transaction.
Yeah.
But it doesn't mean that we win all of those. Sometimes it doesn't. I mean, the emotional attachment to that upgrade may outweigh, the just the thought process in and around, hey, I'm saving a bit more in interest or something like that. But it's a challenge. And our originators come up all the time, and here's what they say: this is a RESPA issue, right? First and foremost, listen, builders, we work with some that have in-house mortgage companies, and look, they're out in the marketplace. They're doing this. It is not a RESPA issue, right? They're perfect. They're not governed by that. So it's like they can't do that. It's RESPA. No, that's not the case. But it is a challenge, and it does come down to really making a case for the elements of what we can control, right? We can control interest rate and fees. We could talk through the benefits that protect them along the way. And if still that the upgrade or the bonus or the closing costs outweigh that, well, then we'll hope to get them on the mortgage side. We hope to get them, when they come back into the market, because they usually have a higher interest rate, and now we refinance them.
Yeah. Carla's got another comment on this. This is a brilliant conversation, by the way, Chad, and very helpful. Carla's saying we need the language to share because the in-house is higher interest. Yep. So, being able to articulate the value proposition to the buyer of, whether or not they go this direction or another direction with another mortgage company.
Yeah. We could, as a follow-up here, I could get some of our originators. They're closer to the street, right? Share some of the commentary of language and some of the strategies they use to overcome that. And there's also some calculators that I think are, very, they're simplified in a way that you can run some numbers and just really show from a graph perspective, like, this is how long do you plan on being in the home? If you get an answer, hey, we're going to be here forever. Now you can show that difference. And it really shows somewhat of a storybook visual approach to, wow, look, how much, sometimes just hearing the numbers, but seeing it on paper makes a big difference, especially when you can run, here's your loan amount at this interest rate, and here's your loan amount at this interest rate. In 3 years, you save, 7 years, 10 years, how much they're saving in those scenarios.
Yeah. I'm real curious, and I don't think we can cover it today, but I'm always curious about where's that 10K come from, and it's got to come from someplace.
For sure. But I got to tell you, Ron, if I'm being honest with you, I'm a builder. If I'm a builder, I do the same thing. It creates a competitive advantage in my favor, and I think that is, look, the beneficiary in that scenario is the client. Is that individual, they now have a choice to make. They benefit in that scenario. But I would say this, I would do the same thing if I was the builder, because it creates a competitive advantage in my favor.
So Carla is saying that's her biggest issue.
Sure, yeah.
What is it, Carla? What's the biggest issue? Getting
So
funded outside of the builder's mortgage company? Is that what you're saying?
yeah, I think your biggest issue is the in-house lender, offering something that is tied to the construction or the build, in the financing, or or it's a closing cost credit or something like that.
Yeah.
That now it's tough to compete with.
Yeah, she's saying working with small builders, 1 to 10 homes a year, they can't do the closing costs the same, and so it's somewhat of a disadvantage.
Right.
And that, yeah, I tell you what, that may be a topic for another conversation too, because I would really like to explore that with you further, Chad. And Carl also says appraisals are now coming in below
Yeah.
construction costs.
Yeah, we've been seeing that a bit on our side as well. And then typically we've got to do it again. That's where the conversation with the builder comes, right? Having that relationship, because the question is, in that scenario, if it's below the builder cost, what could be done there? Could kill the deal. There's no question, right? But is there a way for us to make some adjustments on our side, the builder make adjustments and still achieve a deal? We've been able to successfully do that for the most part. But in some scenarios, we can't, right? We just, because the value of that property, based on that appraisal, it's not covering that builder's cost. Now, in a scenario like this, that's where some of the non-traditional funding sources may come in to say, hey, we'll still consider doing it even though we're not getting the appraisal, right? That wouldn't be something that mainstream lending can do. But look, if you went to the local bank or credit union that you have a relationship with, and they may, it also would depend on how much that borrower is putting down. If they're putting down a significant amount, you may be able to overcome it in that scenario. That type of portfolio lending typically happens more local, regional, right? That local bank, that regional bank, they maybe understand the local landscape, the builder, and then they've got typically a relationship there that makes sense for them to make a business decision on that loan. I would tell you that the juice has to be worth the squeeze. If it's a small loan, I mean, look, there's maybe not a lot in it unless they're, like a really high value client. These are just things that are from my experience, what I've seen. So I don't want to generalize and say it's this way across the country in every nook and cranny, but this is what I've seen. We're not nationwide. We're in 37 states.
37 states. Okay. Maybe we can get a list of those from you afterwards to share with everybody. So, one of the things I'm interested in, that's a great quote. The juice has to be worth the squeeze. I've never heard that before. It's going to become
I can't take credit for that one. I heard that from someone else.
I'm putting it on you, dude.
Yeah.
So, you've thrown out a lot of different programs and, FHA, Fannie, and all these things. Really kind of makes my head swim when I start, because mortgage is its own language and there's a lot of stuff to learn here. But from your standpoint, having done this for so long, when you are looking at a potential deal, you got a buyer, right? What's the process, if you can say, that you go through? Is there a way, and how can realtors go through? What's the top 1 or 2 or 3 questions? Okay, it's this situation or it's that situation, so that means I'm going to go this direction. That means, does that make sense? What's the chain of thought that you go through to say which is the best opportunity? Are there things that realtors can kind of click off and give them an overview of different things, different strategies for each person?
I would say that, it starts with, in my mind, the builder, the type of builder that client is dealing with. Then you start to think through financing, right? So In the presentation you'll send out to everyone, Ron, there's a list, and I just went through and gave some kind of strengths and weaknesses. If you want to pull that up, I'll just take you to the slide, and I think
Yeah, absolutely. Yeah, let me pull it up right now here.
So then we start with the builder. So yeah, go to the next one. It's going to be down the list here a little bit.
Okay.
Yeah. So
yeah. Don't give me too many buttons to push here. All right.
Keep
going.
Keep going. One more. Okay, here you go. So these are the builder types, right? You got your production, your tract builders, right? They're buying lots of land. They're looking for economies of scale. A lot of times they may have an in-house lender. I would say for Carla, I'll bet you she's going up against production or tract builders, and they're making these kind of adjustments because, they're looking for efficiency in all ways, right? They're looking at efficiency, and they're also looking to earn income as many ways as they can. A lot of times tract builders also own the title company that they're associated with, right? Then you've got custom builders. Custom builders typically going to be a higher price point. Most of the time, it's going to be stick built, but there are definitely opportunities with custom builders there, and there are opportunities with financing. Manufactured, that's offsite, and there's lots of financing opportunities there, but there's some limitations depending on the product. Modular. Here's one of the cool things about modular. Modular is offsite, gives you the efficiency, but is appraised like a stick-built home. That's a secret that a lot of people don't know. Modular homes are appraised. They don't have a HUD tag. They're appraised just like a stick-built home, even though they're built offsite. Love modular home. I think, again, that's part of the future of building in our country. Spec is there's tons of opportunity for realtors on the spec side. Financing, that's a bit more builder financing because that's not making its way to the client yet. Builders typically, maybe they own land, they purchase land, working with an architect, or a designer building a spec to kind of, meet that particular or gauge that market's needs. Sometimes those spec end up as a model home, but there's definitely opportunities for realtors in that space. And then specialty kind of things we talked about, which are, they could be stick built, they could be site or factory, alternative builds. That's going to get to where, depending on the materials they're using, can dictate financing. So that's kind of where you start when you're choosing financing. Going after, let's say, custom home builders with a single close construction product. If they're building in the $1 million range, depending on where you are. Now in California and some other areas, you could get there. But that, typically is not going to touch the single close. You're looking for much more traditional in those scenarios. Although at some point in time, pre-COVID, we had a jumbo single close. And hopefully at some point in time, I can bring it back again. I know how much interest there is in that for sure. But, right now, I don't know of one that exists. Although I do think Flagstar may still be doing a jumbo single close, maybe. I think.
Where's the cutoff amount for the single close, approximately?
It's going to be your conforming loan limits. So the conforming loan limits are going to go to 6 something here at the beginning of the year. We're already offering that. So we're offering the higher loan limits now, this early, before the year closes out. And then on the Govy side, for FHA, it's going to follow the county limits, but there's not a limit on VA. VA has a higher limit, right? And you could go to, depending on their VA certificate, how much they can finance. So starting with the type of builder or build is where you're going to start in financing. Production and tract building, typically, single close is going to be a good fit there. You may have to battle it out a little bit with if they have an in-house lender. Sometimes we're the in-house lender for those companies, which is okay, right? Custom, typically going to be a higher price point. Manufactured, great opportunities there, hits the price point. Modular, the same. Spec, spec typically is going to be builder financing. And then now they're selling it. That's where they can really use the real estate agent's help. And then specialty, it all depends on what they're doing to see if it's approvable.
Yeah. So, any of the other slides that you want to try to hit here, Chad, while we got you here?
Well, you know what? I can't remember what I have, so let's go to the next one. Okay, this one is different types of product. And you'll hear it a lot of different ways. It's traditional, or it's a 2-time close, or a bridge financing, or construction only. The only reason I bring that up is because, I think there's this thought that there's so many different products out there. There's just a few that they all just have different names. And then I kind of went a little pros and cons here for you guys. If you go to the next one, builder financing. This talks a little bit about, what Carla was talking about, the builders that have mortgage companies in there and kind of what the pros and cons are there. One of the things there is that incentive balancing. So incentive balancing is, I'm going to give you that 10K. Where's it coming out?
Mm-hmm.
Right? Where is it? That's got to come out somewhere. So if anyone tells me that they've got enough in margin that they're going to, give up 10K, I got to tell you, maybe it's just, a pad that's there or exists there, and it's used in that marketing scenario. So it's just one of those things to consider. Go to the next one. So this is the single close, sometimes called one time, or one close, or C to P, or all in one, or construction to perm. So, just kind of giving you the nomenclature there, and then some of the pros and cons. Lots of pros, and maybe the list is a little longer because this is the one we do and it's near and dear to my heart. But there are, it's not as flexible. It does follow mainstream guidelines. So if you're looking for something that is a bit unusual, it's tough to get those financed. Shorter build times in the scenario of, we're going to stick to that, 9-month build time. There are some opportunities if it has to be extended, but, building certain things, if they need a 15-month build time, we're not going to be able to get there. Builder eligibility, right? We're going to evaluate that builder at a high level, and maybe that's something that could be an issue. And then labor and material limitations, can hit this product as well if it's slowing things down. So just a couple of the drawbacks there. And I know probably shouldn't, but I always feel like it's better to talk about the things that could go wrong, or that we all know the things that could go right. So these are just some things that I've collected over some time.
Yeah.
The next
I love it. I love it. Carla's saying she's got to jump, and she's got 32 showings so far.
Awesome.
You better get with it, lady. Kind of falling behind there, Carla. 32 showings in 72 hours for small builder. What's that?
I wanted to, let's do one more slide because I think it dovetails nicely into what Carla's doing. So go to the next, and these are just some, the other finance. You guys could go back and look at this. Go to the next one. Next one. Next one. This is like our process. Go to the next one. Here it is. Okay. Here's what's interesting. Many builders, right? So sometimes it's tough for a realtor to say, where is my opportunity with a builder and in this space? And if you've been in real estate for a long enough period of time, especially in a market like this, you could be, so Carla, she's showing, and she's showing for a small builder. But let's say you're not working with a builder. You're showing, and they can't find anything. All of a sudden, they ghost you. And in some cases, what happened is they've walked into a builder. They're in their model home, and now they're down the road with that builder building a home of someone that you've showed basically every property that's been available, and you lose them. Even if you have a buyer agency agreement, if they're not a licensed realtor, they may not honor that. Who knows what that might be.
Yeah.
Here's what's interesting about it. Builders, in most cases, need real estate agents in the real estate community more than maybe they know. Here's an interesting statistic. So if you look at the highlighted there, and I know it's kind of ugly, but I think it makes sense. So in companies with paid employees, right, the Home Builder Association found that 2/3 of home builders and 3/4 of specialty trade contractors have revenue less than $1 million. Why is that important? It's the next one. That means that 96% of home builders and 94% of land developers, right, are small businesses. Small businesses. They don't have huge marketing departments. They don't have huge sales teams. There are resources that the real estate community brings to the table that, in my mind, makes them an absolute natural partner for builders. That's where the hoodoo comes in, and why I feel so strongly about, why it needs to be out there and everybody be a part of it. So one is the extended sales team. So Carla's scenario, she's out, she's showing, she's essentially extended sales team for that builder. And by the way, I don't know, maybe she works for the builder, or I don't know. But even if you're not, if you have your own agency or you're working as a part of an agency, that extended sales team, remember, I mean, 96% are small businesses. They need you. Here's another thing that I think is an important, and then we'll get talked about a real world scenario. Mature and consistent marketing. I don't know that real estate agents know this. I know this. Financial services, insurance, right? Financial planners, mortgage. Look to the real estate community to lead in marketing. You got marketing in the real estate industry is, I mean, it's the lifeblood. They are consistent. They typically innovate, are extremely creative, and as I mentioned, for many builders, that's going to be lacking. They're not going to have a big, robust, and we're talking about the majority of them, robust marketing, where that's the strength of the real estate agent, right? They market at the highest levels. In fact, it's so respected that other financial services look to them as the leaders to say, hey, if realtors are doing this, we may be able to do this in our business, right? Certainly it'd be the same on the build side. Referral relationships where, you're making partnerships with builders where you've got buyers that maybe can't find something in they're going into the builder. But it's the flip side too. In some cases, for the builder, they got folks that, hey, they're not going to go through the builder. They can't afford it, but they still want to buy. And now that can be a relationship back to, sent back to the agent. And here's the thing. Let's say that builder's not a real estate agent. That's something they can, become a real estate company. Now you can have, in that scenario, a referral fee set up. And I've seen some of those relationships develop over the last year where the builder now, goes through and becomes a licensed real estate firm, only so that they can send those buyers that are not building to agents and earn income that way. Now they've got this reciprocal relationship going back and forth, and they need each other. And then the last, I've called it the Trinity. It's the package deals: land, model, and financing. So land listers, this is where it goes back to spec builders or custom builders. You're listing land. Sometimes I know a few agents, they're like, shit, I got a land listing. It's going to be on the MLS for like 100 years, but in that scenario, you make a partnership with, again, remember, in most cases, they're going to be lacking from a marketing perspective. Ron, you know this because you have these conversations with builders, and sometimes they'll tell you, like, hey, we're not digital, right? That's where Hoodle, I think, dovetails in, right?
Yep.
So, but real estate agents are digital, and they market at the highest level. And a land model financing deal, here's the land, here's the model here's the financing package deal, and market that. Most builders wouldn't do that or occur to them to do it. It also, especially for a spec builder, right, can be something that now there's land that's available. They build a spec, and then that real estate agent now can market that. Think of it from another perspective too. It kicks off a whole bunch more of attention that are buyers or potential buyers. They go in different directions. Absolutely. They may not end up building. They may end up buying. So the land package deal makes a lot of sense because now it's a visual. It's like sometimes we have a hard time in our busy lives of getting to that next, right? So it's, well, I see this land, but it's going to be a big pain in the ass to, find a builder and build and do all the things that I want. But when you package it together, here's the land, own that land, and build this model or one of 3 models, and you can finance it all in one loan, buying the land and that package all at one time. To me, it's a home run for the agents that are listing land. Some agents who may not want to list land make them want to, and then it brings it alive. Wow. It tells the story about what can happen on this piece of land, right? This home can exist here, and you can finance it all in one loan. Or if, let's say it's a larger loan amount, maybe, you've got to look at some other options on financing. But that's where the marketing comes in, and that's where builders, in my opinion, is the biggest opportunity to lean in and work with them.
Chad, I would like to, at some point, maybe have you come back and specifically talk about that thing right there. And, or Faith or one of your other folks.
Yeah, Faith.
Come in, but I tell you what, guys, if you're listening to this or if you hear this video, the stuff that Chad is sharing with you right now is so powerful. I hope you're leaning in on this. Take a picture, take a snapshot of this, by the way, Chad, is it okay if I share this document
Yeah,
afterward?
I created it for you guys, and I put one for you close to the end. Go to the next one.
That's awesome. Okay, all right.
One more for you, Ron.
Hello.
That's for you. Because I'm a huge believer in Hoodle and their mission in, bringing, look, some of these subdivisions or homes are invisible in some communities, not all, but some. And, as agents out there representing these buyers, the goal is to get them into a home. And when they're invisible, sometimes we lose them, on the, to the builder, or they give up, right? Sometimes they give up where they're frustrated and they can't, they can't get into a home that makes sense to them. And I believe that's Hoodle is the solution to help bridge that gap, where now agents and builders are working together in a way that really serves those communities and gets folks into homes.
Yeah, man. I tell you, thank you for that. Go ahead, Heike. Were you gonna say something?
Oh, I'm just really excited and impressed, and it's just really valuable stuff. And I mean, as you were talking, Chad, I mean, marketing, I know that's really my weak point. I'm great working with clients, and so Hoodle is really a blessing to me as well. And I've been talking about this social media guru to Ron, and if I'm allowed to mention him, I would love to mention him here as well. He's look him up on Facebook. His name is Kyle Draper. And
Draper,
he just helps agents, and his main focus is realtors and mortgage lenders, and he helps them to do free social media marketing. He focuses a lot on short videos, live videos, but it's educational, it's consultative selling. It's not just, hey, look at this house, do you want to buy this? But just educating people, and therefore drawing people in with providing value, and therefore people come back to you. He has a podcast as well. It's called Social Media Mindset, and there he interviews people from all over the country with all the different approaches and a variety of lenders and agents. And it's just it's outstanding material. And to me, kind of Hoodle and what Kyle talks about as a combination is just really the way forward for me.
Sure. Well, listen, I wouldn't cut yourself short. I'll bet you're better at marketing than you think. And if I showed you some of the things that I see that come over from some of our eligible builders, I would tell you that you would think that some of it was born in the 1980s, but it works in some cases because we all know that it's really the product that sells, right?
Nice.
Now, if you can get out there and represent it and do it in a way that's telling a story, that's authentic, that really is relevant. When I say relevant, sometimes the answer is no, or it's not for you, and it's okay. I think sharing that story of like we talked through today, a lot of the negatives, what could go wrong. I think if we do more of that, we have a better educated group. It's a better educated builder, realtor, lender, borrower. That's what we're looking for. A new home build may not be for everyone, but I'll bet you're better at marketing and explaining those things than you think.
Yeah.
Well, that may be true. And I mean, my philosophy is I want people to make educated decisions, because there are a lot of times there are way fewer problems when people really understand the pros and cons and consequences of certain decisions. And there are typically far fewer problems down the road if you educate people on the front end.
For sure. The advisory approach is so important. I think especially in what we all do, right? We are helping folks through, in most cases, the largest financial decision of their entire life, right? And they're not taking it lightly. Certainly, we should not take it lightly. And we know that the type of professionals we want to be around, I think it's also important to be that type of professional as well.
Absolutely.
And look, I'll tell any originator, you've arrived in this business in a relevant way when you have a deal that you turn away because it's not the right thing, even though there was a commission on the other end of it, and it's not the right thing for that particular borrower, and you turn them away, you've arrived. You're now, in this business, in a real way. So, it's I think Hulu's a part of that, and as the things that we're talking about, which is the lender side and the real estate side and the builder side coming together, because it gives information that right now is very difficult to find.
Yeah, I
You
agree.
know, and I want to dovetail on that. I mean, one of the interesting numbers, a couple of interesting numbers, there's about roughly about 10% of if you had a pie chart of all home buyers in a given year, you could write the median point is about 10% of people are going to build or buy new. But NAR for several years, a number of years, has done a big survey. They survey 7,000, I believe, buyers every year, and they asked them, would you prefer to have new construction? And the number that comes back year in, year out, 60%, 59% to be exact. But, so for every one person that builds, there's 5 more that say that they want to. And they walk away from it, or they run away from it because it's so fragmented. They don't get the options. It seems like the builders and the realtors and mortgage, I don't get how this works together. Where's that $10,000 coming from?
Yeah.
And so,
sometimes, quite frankly, we're not all on the same team.
Yeah.
Right? We're could be a competitive scenario on the real estate builder side, or the on the lending side of what will be financed, or being clear about it. And again, pushing it back, towards Hulu, because again, I believe in it. It gets us on the same team. I think that's so important.
Well, and here we're kind of over the top of the hour here. I want to address a couple last things here. By the way, guys, if you didn't get this already, get a snapshot of this. Chad has graciously put together this whole document for you guys, for anybody that's watching here today or picks up the video. I don't have it right now, but if you message me afterwards, I'll give you a link where you can go and register and download this document and have a copy for yourself. But I want to say something here, because this is so incredibly powerful. When you begin to understand that these data points that Chad's pulled together for us, look, this is so powerful because builders don't have the marketing chops in a lot of cases. That's not what they've grown up with. They know how to build Taj Mahal and bring it up out of the dirt in the next 4 to 6 months. But if you talk about marketing, it's not in my DNA, really. Now, this is the opportunity, for many reasons, for realtors to step into this space and begin to add more value, create absolute massive differentiation for yourself, more value for the builder, more for the developer, more for the buyer. And I loved what you put here, because I use that a lot of times. You can talk to the builder about, hey, I'd like to be an extended part of your team. Consider me an outsourced marketing partner. You don't pay me a dime until and unless I make you money, until I make you, until we have a deal done. I know it's crazy.
Here's an interesting thing too. So think about Carla's scenario of the 10K, and it's happened in a few markets where the agent will say, look, I can't, the builder won't pay my co-broke. They won't pay the commission. Think about it. If they're willing to give up 10K, right, in that scenario in the financing, in most cases, I would say in most cases, they're going to pay the co-broke. They're going to pay that commission on the real estate side. It is in the ask. It's in the the actual reach out, and because in many cases they might be tough to get to, you might have to go there. That's always, in my mind, the biggest challenge. Once the conversation starts, it's like, well, absolutely, you bring me buyers, and they build. Sure, I'll do it. But it's getting that a point to have that conversation that could be the challenge.
Yeah.
Right. So, Chad, I'm just going to throw it out there. I'd love to have you back sometime, because there's other topics that we need to drill down into. One of the things we didn't get a chance to talk about that I'd really like to talk about is the realtor loan originator relationship. How can realtors make those work the best, and create the right types of relationships with their mortgage loan officers, to where there's a give and take and there's a flow back and forth, and everybody's creating synergy and value for each other, right? And I hear a lot of strategies about how to do that. That's a whole nother thing. And your Trinity package too. I really was hoping we'd get to that.
Yeah, that sounds really exciting.
That could be a whole hour. That one could be a whole hour in and of itself, for sure.
Well, I think when we do this again, Heike, I'm going to have you back on as a sidekick here because I just, we can kind of tag team on Chad and, hammer him with questions.
Absolutely.
Guys, thank you so much. This has been just such just a wonderful conversation. I think anybody that takes the time to sit through it is going to get so much value out of it. And there's always more to learn, right? I mean, just as we get into this space with new construction, and we're raising the bar, on the quality and the value of what we are offering out in the marketplace every day. And I know a lot of times realtors are like, oh my gosh, I never knew how many questions there are. That is a good sign. That is an absolutely good sign, because when you don't have any questions, that's probably not the good sign. It's like, well, I already know it all. Probably not. But when you start having all these questions and finding these scenarios, I mean, it's just your value goes way up. So, guys, thank you so much. Chad, before we jump off here, what's the best way or place for Heike and Carla and everybody else that's watching here today or sees this video? Where can they connect with you?
So my email address is chad@GoMortgage. Pretty easy to remember.
Okay.
GoMortgage.com, GOMortgage.com. LinkedIn is also really one of the only social medias I participate in. So LinkedIn is a great space. And, our website is Go Mortgage, and then there's spots there, in our product drop down for construction if you want to get a bit more there. So, email address, our website, LinkedIn are probably the best ways to get to me.
Awesome.
So, and I'll share this with everybody. I dragged Chad into the New Home Niche Blueprint group. So he's actually in the group. He's probably too busy to talk a lot of times, but he's in the group, and so you can reach out to him there too as well, I suppose. But thank you, Heike, for bringing these really intelligent questions. Chad, thanks for bringing all the intelligent answers. All I had to do was stand here and talk, and
well, thanks for putting it together. Thank you.
Really appreciate it.
Yeah.
Great meeting you, Heike. Thank you.
Nice to meet you, Chad.
So, guys, we're going to wrap it up with this. If you got questions about Go Mortgage or mortgage in general, feel free to reach out to me or reach out to Chad. If you're in the New Home Niche group and you want to find out about how Hoodle works and how's all this stuff fit together, and we're going to have Chad in for other conversations moving forward. So, thank you guys so much for being here. I hope you have an amazing day, and all of you out there on Facebook land. Hope you have an amazing day today, and be amazing for somebody else. We'll talk to you later.
Sounds good. Take care.
All right.
Bye.
Bye-bye.